Thanks so much, Melissa. Well, the Wall Street Journal, as you mentioned, is reporting now that China's stock market regulator is considering issuing new guidelines that would potentially stop internet companies from listing in the United States, especially ones that have a whole lot of sensitive consumer data, so data that China considers sensitive. Also, the Wall Street Journal was quoting sources as saying that these new rules would target companies that would want to use the variable interest entity, or the VIE structure, which is used by a whole lot of Chinese companies such as Alibaba, Tencent, Didi, to try to skirt some of China's rules and be able to get foreign investment. So the problem, of course, with this whole situation is that here in China, there are a whole lot of sectors that could be considered sensitive. The Journal is quoting some officials at the CSRC, or the securities regulator, saying that pharmaceuticals might be a sector that wouldn't be affected, but other than that, internet, telecommunications, I would argue finance also are really considered sensitive because of the potential disruption that it could have to China's system or national security. Now, this all comes as China has issued new regulations for ISPs and to regulate their algorithms. So the government says this is all part of their effort and recent decisions to try to protect users and their data. So in these guidelines, the internet recommendations are not allowed to promote excessive spending, they said, no fake accounts. Also, they have to make sure to have easy options to turn off some of those recommendations. And again, the government says, as it has been, that these regulations are not meant to really hamper the internet sector, but are meant to have a healthier environment to try to create some of these standards and stave off some disruptive behavior, they say.
Embedded in all this, Eunice, is the notion also that currently listed Chinese companies in the United States could be forced to delist. Is that on the table?
I have not heard that that is on the table. In the past, I've seen that those companies might be just left alone, that these regulations would be for new companies that are looking to list in the United States. However, as with all of these decisions that are being made, there isn't a whole lot of clarity, even though we did have a couple officials recently who said that the decisions that they're making are very clear. And when they say that, officials say that they are not targeted at private companies or foreign-funded companies, but instead are regulations for all of the companies that operate in China.
At the same time, Eunice, I mean, on the U.S. side, the SEC is requiring more disclosure of information from Chinese companies listed in the United States. And Gary Gensler, just this week, I believe, said the clock is ticking. They've got 3 years, and if they don't, they will have to delist. So I guess, in a way, if the Chinese government said, no, you cannot share with the U.S. SEC, that does force a delisting.
Yeah, I didn't hear the final part of your question, but I think you were talking about how the U.S. appears to be making some similar movements to kind of crack down, well, not crack down on Chinese companies, but to make sure that they are up to standard when it comes to some of those listings. What we're hearing here is that the Chinese government actually wants to make a move to try to cooperate with the U.S. And so there have been some rumblings this week that the Chinese government does want to try to, as they would say in the Chinese speak, kind of meet the U.S. halfway on this decision when it comes to regulations on accounting.
All right, Eunice, thank you. Eunice Yoon.